sitting here with just a few months left in 2025. And Josh, what a year it's been. We've lived through quite a few ups and downs, a lot of uncertainty. And specifically, when I think of the US stock market, I think back to April when tariffs came out and we were down at one point over 15%. We sit here today and the US stock market is up over 15%. So, Josh, I'd love to get your perspective on one of the key themes we heard entering the year, which was this idea of US exceptionalism.
Yeah, of course. So when we think about the Trump administration and the changes they had talked about implementing, it was decreased taxation, decreased regulation, pro-business policies that were really going to drive the U.S. to continue to outperform like we had seen for the number of years prior. But what we saw was a focus on tariffs to come in, which really led to an anywhere but U.S. sentiment. And that drove assets into various industries like financials in developed markets, and developed and emerging markets internationally actually are the top two performers in 2025 thus far. So a little bit surprising for what we saw coming into this year.
One of the other big stories, Josh, that we've really seen play throughout the year is this idea of AI, right? How is AI being used, and is it potentially a bubble?
Yeah, absolutely. And you do see a lot of these companies investing in each other, furthering technology, and a huge amount of capital expenditures that have gone in the direction of AI. But when we think about bubbles, and we've seen them through the tech bubble, through the financial crisis, it's really difficult to time when these bubbles will burst in the future. So what we suggest is actually staying invested, but being cognizant of what you're invested in. We're actually going to pull up a chart here that shows investing at all-time highs. And what you see is they tend to cluster together. And if you only invested at all-time highs, if you have a long-term mindset, you still have a very solid return profile in your portfolio.
It seems so incredible when you see a chart like this that it shouldn't make sense, right? But all-time highs actually tend to be a great buying opportunity. The other thing too, Josh, that is interrelated to this AI story is that the bigs seem to continue to get bigger, right? We see a continued march forward in some of the biggest companies. Could you tell us a little bit about what that means?
Yeah, 100%. So when we think about a couple of different parts of the portfolio, we think about one being the concentration of the top 10 stocks in the S&P 500. And we're seeing that at the highest level it's ever been. And that can be a little bit concerning. So we're going to pull up another chart here that actually shows you the top 10 stocks in the S&P 500 by decade. And what you'll see is based on the colors, you can see what year they started being in the top 10. And you don't see a lot of crossover from decade to decade. So even when some of these juggernauts, and you'll see names on here like GM and IBM, even if you're in that top 10 and it feels like you can't fall, you do need to be cognizant that some of these do get out over their skis and can provide some risk in a portfolio.
Seems like another reason to have a diversified portfolio, right? You don't always know what's going to be the next winner. The last area that I did want to focus in on was fixed income. It's been a really strong year for bonds. We've seen strong returns that we haven't seen in quite a few years. Tell us a little bit about the interest rate environment today.
So what we've seen is interest rates begin to come down in 2025, which is driving some of the returns we've been waiting for since 2023. I remember recession indicators going off back then and everyone saying move to bonds. It's great to see them finally moving in that direction. Looking forward, we have a potential for a rate cut here shortly in the next few weeks, as well as another one rumored for December. 2026 will get a little bit murkier because we have some inflation results based on the tariffs that have gone into effect, as well as somebody replacing Jerome Powell in that Fed chair seat. So a little bit of uncertainty there, but future expectations do point to potentially more cuts in the future. So still an opportune space to be in. You are getting compensated very well for being in very high quality bonds, which is what we hold in the portfolios right now.
Josh, when I try to encapsulate kind of your themes here, it seems like we've had a year of uncertainty, but markets have continued to march forward, stock and bond markets. I'm sure 2026 will bring its own unique surprises and uncertainties. This is why we believe so deeply in your financial plan leading your investment plan. We don't try to predict exactly every outcome. We try to prepare your portfolio, make sure you have the cash you need, stay diversified, and invest for the long term. We think that's the best strategy for success.